A low interest rate environment coupled with low inflation and a stable exchange rate would augur well for the economy. And if there is foreign inflows, we can expect more companies opting. By being listed, you automatically have to comply with minimum corporate governance regulations, and I think we have fairly robust corporate governance regime that is in place. We have set up an entire framework that will facilitate state-owned enterprises to list. So we have seen a negative GDP growth in the last 3 years. And I think with the economic reform program that is on, we may see the economy turning the corner and having maybe GDP growth of 2 to 3% going forward. If you look at the economic indicators like interest rates, inflation, and also exchange rates, a low interest rate environment coupled with low inflation and a stable exchange rate would augur well for the economy. That coupled with a re-rating of the country rating would be beneficial for capital markets, particularly if you look at debt and equity capital being raised. That will be a catalyst for capital raising within the country. So I think we are hopeful that particularly the re-rating would stimulate foreign investment as well, both foreign direct as well as portfolio investments. So that's our expectation going forward. So we have been doing many things in order to encourage and stimulate new listings. If I go back a few years, 2021 was particularly a successful year for new capital being raised. We had 14 IPOs and we raised over 120 billion in capital, both from the primary and the secondary markets. But 22 and 23, we are seeing a slowdown of the capital being raised due to the economic downturn. So what we have been doing over the last few years is that we have enhanced and widened the scope for companies to come in and get listed. For example, we have set up a separate facility for local companies to raise foreign denominated capital, and 60% of that can be taken out of the country for overseas expansion. So that's one area where Sri Lankan corporates can benefit. Secondly, we have widened the criteria for listings so that a broader section of companies can get themselves listed. So we don't only go on the profitability test, but we have also gone on the revenue test so that we enable a wider scope of companies to also get listed. Then we also have set up a separate board for SME companies called the Empower Board with lesser stringent listing criteria and also post-listing continual listing criteria, which will enable the smaller companies like the SMEs to also make use of the market mechanism to raise capital, because capital is something issue that a challenge that they have, and use the market mechanism for raising of capital and also to enjoy the benefits of a listed company. Then we have also set up a separate board for state-owned companies to be listed. So on the listing front, we have done a fair bit of work in expanding the regulatory framework to encourage companies to get listed. Then apart from that, I think we have also done modifications to the approval process. So we have a single window concept where approvals are fast-tracked for listing applications. Then apart from that, we have also been actively engaging with companies on a one-to-one basis, conducting forums, workshops, discussions, focus group discussions, etc. with potential companies to educate them and to have discussions with them on the benefits of being listed. and that's an ongoing process as well. So these are some of the measures that we have been doing, and we have also been engaging with some of the other stakeholders, like for example the regulators, the SEC, Central Bank. We have been engaging with investment banks, continuously talking about how we can encourage listings, how we can tweak regulations and do the necessary modifications so that we keep in sync with the market and respond to market needs. So that process is ongoing. So we are doing a lot of work with broader stakeholder community to encourage more companies to make use of the opportunity of raising capital through going public. With improved economic conditions, and if there is a push for investments, we can see more companies making use of the market mechanism to raise both debt and equity capital. So I think with a interest rate regime that is with a low interest rate regime and a stable exchange rate, and if there is foreign inflows, we can expect more companies opting to list. So we are hopeful of more IPOs in the coming year. In fact, we have a few listing applications as well that is being processed. So we are hopeful of a better year in 2024. Yeah, so the primary benefit of a company listing is the ability to raise capital, both debt and equity capital. But quite apart from the capital raising aspect, there are a number of other benefits that a company can get. For example, they can discover a price for their share, and the market actually will place a value on the share. So price discovery is another strong motivator for companies to stay listed. Then other than that, they also will find that listing will improve the governance of the company and raise the stature of any company. So they are by getting themselves listed, they automatically conform to a regime of good governance. So the aspect of transparency, accountability comes in, and therefore I think they are perceived as better governed companies. And a lot of companies we found who are listed want that tag of a better governed company. So the fact that you're listed will give you a better status in terms of a better governed company, because you by being listed, you automatically have to comply with minimum corporate governance regulations, and I think we have fairly robust corporate governance regime that is in place. The other benefit also is that you are being more transparent in your business. With the corporate disclosure policy that is in place. So companies don't really see these rules as a hindrance, but more as benefiting the company, so that they are ultimately they run a better business. Quite apart from all that, I think the fact that you're listed, the image, what it does to your image and your stature, enables them to have better standing in terms of attracting talent, better terms with their suppliers, with their bankers, with their overseas counterparts. Therefore, there is a number of other benefits there also that accrue as a listed company. So overall, I think companies stand to benefit by getting themselves listed and being part of this elite club of listed companies. And when we do have, we have had interactions with those companies through surveys, etc. We recently, in fact, conducted a survey among companies that are already listed. I think they value the listing for these reasons, that it makes them better governed companies as well. Yeah. So what we did recently was we created a separate board with separate listing criteria, and we called it the Catalyst Board, very aptly called it the Catalyst Board, so that we are ready for listing of state-owned enterprises. We have not compromised on the post-listing, continuing listing rules in terms of governance and corporate disclosure, but we have made some changes to the initial listing criteria so that some of the state-owned enterprises can list without difficulty. In terms of expediting, there's not much we can do as an exchange, because the decision is with the government to list. But as and when they do decide to list, we are ready for them, and we have set up an entire framework that will facilitate state-owned enterprises to list. So what we have done is both on the debt and the equity side, there are a few products that we have come up with. So if I mention a few, one is the real estate investment trust that we launched. Then on the debt side, there's a few products that we have launched. One are the sustainability bonds, green bonds and blue bond framework. And we are doing quite a bit of work in encouraging companies to issue green bonds. And we have seen a fair bit of interest among corporates as well. So we are working with the companies that are interested in the issuance of a green bond. We are working with audit firms because we need them for example, pre and post assurance reporting where green bonds are concerned. So we are working with the ecosystem to prepare the environment in a manner that will facilitate the issuance of green bonds. So that's something that we are working on currently. Then we've also done the framework for the issuance of perpetual bonds. So there are a number of products on the debt side that companies can make use of apart from the conventional corporate bond. Then on the equity side, we recently launched stock borrowing and lending and regulated short selling. There again, this is one of the first equity products that we have launched, and we believe that once there is a upturn in the market and there is activity, that investors will make use of it. So regulated short selling will be beneficial for investors when they want to make use of a market condition. And from the lender's perspective, those who are holding dormant portfolios can also earn money by lending their portfolio. So on whatever side is, whether on the buying side or on the selling side, you really stand to gain with this product of stock borrowing and lending. So those are the new products that we introduced recently, and all of them will go towards increasing the depth and breadth of the market, meaning a wider range of products for investors to invest in. And secondly, it will give the kind of liquidity that the market wants. So we are hoping that will increase the activity and the liquidity in the market as well, both on the debt and the equity side. So on the debt side also, we have introduced the repo market for secondary trading of corporate debentures. We have done some modifications, also reduced the fees, etc., to encourage repo trading. So we're hoping that that product also will see traction going forward.